Welcome to this Bell Direct weekly update. I'm Julia Lee, an equity strategist with Bell Direct. This first chart is of the ASX 200 index, and I haven't updated it in a while, and that's because nothing much has changed on the market. Amazingly, the Aussie share market has trended in this range for a huge 17 weeks. This week was no different. The ASX 200 did drop 0.6%. The best performing sector was property with a gain of 1.1%, and the worst was financials, down by 2.1%. Of course, with reporting season over, a lot of investment houses now focused in on their top picks as well as strategy for portfolios. So having a look at some of those, Deutsche Bank talking about the drift of the ASX 100 stocks. Now, there's been a lot of research done on reporting season and outperformance and underperformance of stocks that come out with better than expected earnings. Looking at Deutsche Bank, they're saying that if a company manages to beat consensus, not only does the stock usually see around about a 2.5% lift in the weeks after the result, but an additional 3% in the 6 months after the result. But a stronger signal is if you see a beating of consensus plus share price outperformance, then what you usually see is that in the 6 months following, a 4% outperformance in the stock around about 70% of the time. Given those statistics, having a look at some of the buys that Deutsche Bank has on and stocks that managed to impress Deutsche Bank during this reporting season, they include stocks like Medibank Private, Oil Search, Santos, Star Entertainment, as well as Tats. Other stocks where they don't have a buy rating, but we have seen it beat of consensus and outperformance in terms of the share price, include stocks like Flight Centre, Fortescue Metals, GPT, Aurora, as well as Perpetual. Of course, being reporting season, a lot of investment houses changing their top picks as well. So having a look at Credit Suisse's top picks, and they've added Premier Investments as well as Speedcast to their list, but removed SG Fleet as well as CSL shares from that list. And the list of shares that they have on their top picks, well, there's a number of companies there: ALS, Boral, Computershare, Caltex, just to name a few, Fairfax, as well as iSelect, Lendlease, Nine Entertainment, Premier Investments, Qantas, Speedcast, Star Entertainment, as well as Southern Cross Equities. So plenty of opportunities there as well as ideas there. Looking at Morgans and the stocks that they have as a standout after this reporting season, they like Ansell. Ansell seen a divestment of some of its businesses and a refocus on its business. They see around about a 13% outperformance in Ansell's share price. They also like IPH, where they see a 25% outperformance in terms of share price. This is a company that looks at patents and is looking at expanding across Asia. PWH, they say that motorsports was a standout area. They see 33% outperformance of share price there. And Jumbo GIN, which is the lotteries business, they see 28% outperformance there. Looking at Macquarie, which has concentrated on what's been a difficult sector, and that's the retail sector. They have seen a number of different movements in terms of their ratings. In fact, Macquarie quite brave in that investment world. They've seen an upgrade to CSL, to Coca-Cola Amatil, to an outperform. They've also have an ad on Wesfarmers, Metcash, JB Hi-Fi, Nick Scali, as well as Harvey Norman. They have downgraded Caltex as well as Domino's though to a neutral, and they've upgraded Treasury Wine Estates to a neutral. Woolworths remains an underperform. And of course, retail will be in focus this week with Myer shares. Myer coming out with its results on the 14th of September. And I guess the concern with Myer is that we have seen a slowing down in its business, and that's before Amazon even hits the Australian shores. Now, Myer is going to be an interesting result given that it has the largest amount of short positions of any retail stock. It has 14.5% of its shares shorted. Looking at what Macquarie Group says on the stock, saying that it expects a slowdown in sales to continue. In fact, for the second half, it is predicting that like-for-like sales decrease 1.5%. They have a neutral rating on the stock with a 76-cent target. Deutsche Bank saying that pricing pressures in the short term will remain and they have a hold rating on the stock with an 80-cent target price. So Myer will be in focus this week, and we'll see a number of stocks trading ex-dividend once again. But given that we've just seen the end of reporting season, a lot of investment houses just focusing in on rebalancing portfolios and some of their top picks. I'm Julia Lee, an equity strategist at Bell Direct. Hope to see you next week.